Hello and welcome to this week's edition of Taking Stock. This is the show where we look back at the week which has gone by, tell you what mattered, why, tell you what did not matter. And of course, we also look ahead at the week which is in front of us and tell you what would matter, what potentially will be important to pay attention to and get you ready for the upcoming week. I'm Prashant Nair. With me is my colleague Ekta Batra. Hi, Ekta.
Hi, Prashant. Yes, absolutely. Well, we are going to sum up the entire week for our viewers. But overall, Prashant, it seemed as though there are a lot of triggers in place for next week when it comes to the global space. It was just a little hold back, you'd have to say, in terms of all of those events which we're watching out for.
Broadly, Ekta, I think global markets per se seem to be in a pretty happy mood. I mean, you look at, there are one-off corrections here and there, but there is no sustained downtrend that we are seeing. And you can start with the mother market, the US market, the S&P. There are lots of questions whether we are starting another leg down and things like that. But, generally speaking, risk sentiment is kind of held up pretty well. I mean, you look at Friday's session as an example. That is that. The big global themes which have been there now for the last many weeks still continue to be there. And it's at a standstill. So, things like the the US-China trade thing, Brexit, incrementally data which is coming in a little weaker, the US government shutdown. It's all right there. So something could change the coming week, but at this point there isn't very much which is pointing to that particular fact. I just want to make a point that and I've said this before, the rally from the lows which global markets have seen, US and other markets around the world, I'm talking about lows which we saw around Christmas time in 2018, the rally has been very swift and it's continued so far in 2019, and hence I think while the consensus view may be that the lows are in, I think the view is also starting to develop that maybe we will start to see a bit of pullback, not just in stocks, but maybe in yields as well. The picture for yields, for example, in 2019 so far has been far more muddied than it was in 2018. So we've refused to go higher, and that kind of sort of creates the impression that maybe there could be renewed weakness which starts to creep in. I could go on about other asset classes, but I think those are the two big ones. I think we all know the big themes to keep our eyes on and sort of watch very, very closely. Here in India, I think the focus is going to shift and is starting to shift already with on elections, right? We had that a big news organization putting out a comprehensive exit poll, the opinion poll, which calls for a hung parliament. So I think elections, 100 days to go, I think will be sort of front and center here in terms of how we lead up to it. Ekta.
Yes, absolutely. And there were a lot of stocks in focus in terms of results this time round. So, for example, ITC, Asian Paints, Yes Bank. Yes Bank, there was more news there with regards to Ravneet Gill as well taking over the bank. Bharti Infratel, Larsen & Toubro, Maruti, Ultratech Cement, all in focus on account of numbers. And separately, a lot of focus in terms of stock-specific news. So, for example, Z Entertainment, Sun Pharma, ICICI Bank, Prabhat Dairy, Graphite, HEG, ICICI Pru reacting to numbers along with the likes of CESC Ventures and Spencer's retail listing, as well as KPIT Technologies. But joining us this evening on the show is the top Nomura team. We have Craig Chen, Head of Emerging Market Strategy, and Sayan Mukherjee, Head of India Equities Research, joining in on the show. Sayan as well as Craig, thanks very much for taking the time out and welcome to the show. Craig, let's start with you because you're looking at India from an emerging market perspective. How are we placed?
I would say that the overall environment is positive from the global side. We are seeing the Fed cycle reaching a mature phase. We're seeing this kind of divergence that we had last year, particularly US growth superseding many, if you want to say, kind of G3 economies and leading to the stronger dollar beginning to reverse as well. So at least from a global perspective, it does seem like a more favorable environment for India. And I think locally, we have seen a lot of negative news come out, whether it's about, the state election loss, whether it's about RBI governor resignation, whether it's about growth, whether it's about populism. I think these have been factors that have kind of been pushed out into the market already. So I do think there has been a lot of kind of negativity. It looks like things are starting to turn.
Sayan, where are the foreign investors then? Because interest is visibly missing here in India.
Yeah, I think it's been, for some time now. Definitely, I think, there have been some negatives, and particularly if you recollect, in October we had a scare when the oil prices were going up. But I think at the margin, since then, things have started to improve, and there are a lot of macro positive, primarily the correction in the oil price and the whole fear around current account has subsided quite significantly. I think inflation has been surprising on the downside. That also has been quite a major positive on the macro front. And finally, on earnings, I think a lot of investors have been quite disappointed, as you know, on the earnings front for many years now. But I think there is an increasing belief that we are coming to an end of this and we would see an earnings revival. And frankly, when we look forward to the street earnings expectation, this looks a lot more realistic to us at this point. I don't think there is a lot of euphoria as far as earnings are concerned. So in that context, favorable macro environment, driven by lower inflation and crude prices, when you see earnings visibility coming back, I think it creates relatively a good sense among investors. So I would say after October, things have started to improve at the margin.
Craig, one of the big benefits which India has seen in the past couple of weeks is obviously from oil prices. What's your sense in terms of that kind of a tailwind for India within the entire Asia Pac, and does it differentiate India enough for you to make it probably one of your top buy lists?
Well, I would say that India for sure is one of the biggest net importers of oil in the Asia space. So this decline in oil prices will definitely be favorable, whether it's from the current account perspective, whether it's from fiscal, whether it's from inflation. So I do see significant kind of tailwinds on the back of this. Is it enough by itself? I don't think it is. I think there are other concerns that I've mentioned earlier about obviously the macro environment, the kind of political environment. I think beyond the fiscal front, what will be the key focus will be the April-May general elections. That to me is a kind of sticky point from particularly foreign investors in getting too heavily involved in India assets right now. But as Sayan said, I do think that flows are starting to stabilize. We've seen that since November, starting to see inflows into equities and bonds at very marginal pace. I believe that after the elections, there will be a substantial pickup.
So you're saying that uncertainty, Craig, about the election outcome is keeping investors away?
I would certainly say so, particularly after the loss of the 3 key states. I think the pessimism around the Modi government rerunning again on a strong footing is definitely there, the pessimism. But having said that, the baseline from Nomura is still one of a positive outcome. Even if the Modi-led government has a slimmer majority and larger coalition, I think the investors globally will take that as a very good sign that the growth dynamics, investment dynamics can remain favorable over the medium term.
We got the first of large opinion polls, Craig, coming in, and I was mentioning this earlier. Those are. I mean, and then I know there is still some time left for the polling, and things could change, and they do change. But it's showing a hung parliament. I mean, the numbers which are coming in out of these polls. So when you say they're waiting for a positive election outcome, if you don't get that positive election outcome, which as you described could also mean a slimmer majority, but a majority nevertheless. But if that is not the outcome, what then?
Yeah. Well, I would simply say that the risk around this election is very asymmetric. In other words, the potential reaction in financial markets, I'd say particularly on, let's say, the India rupee. If we were to have the scenario that I painted, we have a larger coalition, slimmer majority from the Modi-led government, then I would say, dollar India could trade lower by maybe 100 basis points on the day. But if that scenario doesn't come through, as you mentioned, if an opposition does win out, I think we will have a substantial amount of volatility in the next few days. We'd have a substantial amount of intervention coming through from the RBI eventually. But the end game is that over a 1-week period, I could imagine that dollar India would be trading higher by close to 3 to 5%.
Sain, you all have done extensive amount of work in terms of the permutations and combinations and probability scenarios with regards to elections. What are you recommending your clients in terms of how you should approach equities ahead of elections now? Where should they probably be topping up when it comes to sectors?
You know, as Craig mentioned, I think election outcome is quite uncertain. I mean, we have done the maths, right? The arithmetic obviously looks challenging, as Prashant was mentioning, and about the opinion polls that were posted. So all the opinion polls, if you see since November, actually indicates a hung parliament where the ruling NDA is projected to have less than the majority mark. You know what? See, if you look back on the elections that we had in India for the past 20 years since 1999, you know, the equity markets from 6 months before the elections till 6 months after the elections gave healthy double-digit returns and outperformed many of the markets. So, you know, the question is, you know, are we going to see, you know, kind of a coalition government or very unstable government like the one which we saw before 1999? That's I think would be the key factor to watch out for. But you know, that's not the base case that we are working with at this point. We are still expecting a stable government, but I kind of do admit that you know things have started to turn somewhat more negative, and you know we need to keep an eye on this. It's not terribly bad, but it's kind of you know looking tougher. So what we are saying is that, look, you know, we are not in a position to really take a call on elections. Probably we will do it as we go along and get closer to the event. But the point is, what we are saying is that, you know, we just cut through this noise, and we are saying that if we look forward 1 year, what we feel confident about or more hopeful about is the earnings delivery. You know, and we have seen, you know, a lot of stocks which have already corrected for various reasons. So you get those opportunities. And on the macro front, you know, our house view is that oil will remain benign on demand conditions. And if that's the case, I think the macro looks quite good, which should be supportive of the valuation multiples. So therefore, you know, we are moderately constructive, and we think that through the year we would be able to get to a 10% upside, which essentially what our Nifty target, you know, reflects. So as of on election, there's no big call, but you know, still we are saying it would be a government which would be reasonably stable, and we will not see any major deviation on the policy front or any major macro scare there.
Okay. Sain, you know, the other big trigger, which would be a little more near term, is obviously the expectations of a farm package. Do you think that's enough for you to probably load up on consumption-led stocks?
Yeah, so I think consumption has been a theme for many years in India, right? So we had seen significant, you know, re-rating in consumption stocks. So as a sector, we are underweight on consumption. But you know, there are pockets of rural consumption which is likely to do well. I mean, which is already doing well. So if you look at the commentary from many of the staple companies, in 2018, actually rural consumption overtook urban consumption. And I think you know that could probably, you know, gain support further because of you know the kind of package which the government may announce. So we have you know positive view on some of the sectors there, you know, which are linked to this. But consumption as a whole, staple as a whole, we find you know the valuations quite high and have an underweight you know stance there.